All right, welcome. Good morning, good morning, traders. So today's trading session, I'm going to be showing you what is. Good morning, traders. So on today's episode of live trading sessions with Vetexx, we're going to be showing you what the synthetic market has for us. I hope you all have a good night. And today we are going to be checking the synthetic market, analyzing most of the pair there today so that we can make some money together. Okay. So if you're just joining this session for the first time, make sure you like the stream, subscribe, and share with your friends and loved ones who are interested in learning about trading. Okay. So if you're just new to this session, my name is Vetexx, and all I do on this channel is analyze synthetic pair, basically synthetic pair, and show you how you can make money from the market. And also I share updates in our Telegram community. The link is in the description of this video. Okay, so if you are here, pay close attention as we ride on today's analysis. Okay, so pay close attention. Whenever you have an issue, you can always ask a question in the comment section, and I will do it to always answer. All right, so let's go to the chart. So what I'm going to be doing right now is I'm going to be sharing my screen with you so that you see basically everything I'll do step by step. Okay, and you can also learn from it. All right. And in some places that will do something that you don't understand. I have already made a previous videos on everything I'm going to be doing about the technical analysis today. So you can watch my previous video to get more understanding about some analysis on synthetic. All right. So I'll share my screen right now. So pay close attention. So today we are going to be analyzing up to, excuse me, we're going to be analyzing up to 14 pairs on my watch list. Okay, I have about 14 pairs on my watch list, and I'm going to be analyzing every single one of them. All right. So starting from the first on our list today, we have step 500 index. We have step 500 index, and like I said yesterday, when doing your analysis, you always start from the higher time frame to the lower time frame. Okay, so first of all, we'll go to our 24-hour time frame because on the rise trading view, there is no weekly time frame analysis from there. So what we do is that we check our MT5. So if you have your MT5 available, you can go to the 5 minutes, 1 week time frame, so that you see that if the pair is bullish there, you do the analysis. If the pair is bearish, you know that okay, the trend is bearish. If it's bullish, you know that it's bullish. But what we have here now, because of some limitation, we'll start from the daily time frame. Okay, on a daily time frame, there is nothing on the 500. But if you go to weekly time frame, you see that the pair is bearish on weekly time frame. So now that we know that it's bearish on weekly time frame, what do we do next? We'll go to the 4-hour time frame or the 1-hour time frame to check if the trend is also bearish. Okay, now based on our advanced market structure, okay, I explained the structure yesterday using a diagram, so I'm going to rush through it again. First of all, this is how we do our analysis. Basically, we have our sweep of liquidity. We always have a sweep of liquidity, something like this. All right, these are sweep of liquidity. We have our protected high. See, price will break the structure to give us our first break, and then we have price retrace back into the 50% to give us our structural liquidity. And this structural liquidity is used for continuation, and then price will break it back to give us our second break, which will make our setup to be A plus setup. And then we'll have price retrace back into the POI, taking out this structural liquidity so that it will continue to the opposite direction. Okay, for those of you who are live with me yesterday, this is exactly what I explained. And this is what to look out for on the higher time frame, and this is what to look out for on the lower time frame. It's as simple as that. Okay. So right now we have our sweep of liquidity here. We have our protected high here. We have our first break of structure. We have our structural liquidity. So this liquidity here is called transactional liquidity, which is used for correction. And this liquidity here is called structural liquidity, which is used for continuation. And then we have our POI, which is our point of interest. Okay. And then we have our second break of structure. So this is basically what we look out for. This is the pattern we look out for on the higher time frame. And when we see this pattern on the higher time frame, we scale down to the lower time frame. Okay, same thing you have for sell. It's the same pattern you have for buy whenever you want to buy. All right, so look at it. So this is the pattern for the buy, and the same thing you look out for when you want to sell. So moving on, this is what we look out for. Okay, for our setup to be A plus, it needs to have two break of structure. Okay, if it doesn't have two break of structure, it simply means it's going to be a type 2 setup. So now let's go to 4-hour time frame on step 500 and see if we are going to find that type of pattern of step 400 on the 4-hour time frame. Okay, so you can see clearly that we have a sweep of liquidity here. We have a we have our protected high here, okay, and then we have our first break of structure. You see that price retraced 50%, giving us our structural liquidity, which is there, which is valid. And then we have our second break of structure here, okay. And what the price do? Price retrace back to take out the structural liquidity so that to be able to continue to the opposite direction. And as you can see, as price gets into this POI, which is our point of interest, it started moving to the opposite direction. Now we know that okay, the trend is bearish on the weekly time frame. We have a continuation on the 4-hour time frame. Now what do? We scale down to the 15 minutes time frame to look for the same pattern on the 15 minutes time frame if you are going to see a continuation. And as you can see, we have a continuation here. All right, we have a continuation here. And for those of you that took this step 500 yesterday, I gave you the entry, I gave you the take profit level, and as you can see, price has already smashed our target for those of you that took the setup. Okay, that is why you need to be active in the Telegram community 247, because I always tell you when to buy, I always tell you when to sell, I always tell you when to close. So if you take this setup yesterday, congratulations to you. All right, that means you make like up to 1 to 4 RR if you execute on this trade. Okay, so this is our sweep of liquidity on the 15 minutes time frame. This is our first break of structure. Remember, what you see on the higher time frame is what you also look at for on the lower time frame. Because what are you trading? You are trading continuation. Okay, you keep looking out for the same pattern on the lower time frame until price take out the higher time frame target. Then you stop looking for that sell. Okay, or you stop looking for that buy. And this is our protected high. This is our structural liquidity. This is our second break of structure. This is the POI. Okay, so as price got into this entry, right, and as price got into this entry, it was valid for us to take the trade. So I called out the trade, and then I put at our entry was around 6032.6735, and SL was around 607092. My initial TP was at around 5942.500. So those of you that took the trade and you're using the same TP with me, you should have taken profit by now. So this is my 1 to 4 RR. So you can basically see that this is quite simple. This pattern you look out for on the lower time frame, on the higher time frame, and you see that you get the direction from there. You look out for the same pattern on the lower time frame, and then wait for price to come into your POI, execute on the trade, and make money, get your TP, you close, you are done for the day, you wait for another setup. So this is for say 500. So the next pair on my list is V volatility 10S. Like I said, do your analysis. You know, top down analysis is very important. This is what is going to increase win rate most of the time in your trading. So from V10S, if you have your Deriv broker connected to your MT5, you see that on the weekly time frame, V10S is bullish. Okay, V10S is bullish on the weekly time frame. So you go to daily time frame and see if there is a continuation on the 24-hour time frame. But looking at this right now, there is no continuation yet. There is nothing on this pair right now. It's actually bullish, but as you can see, some people might say you say it is bullish, but the whole trend is coming down. Yes, I know, but because it's on the weekly time frame, this is just a retracement. Okay, price might find somewhere around this point and then either do something like this later on. Price might do something like this. Okay, price might do something like this. Price might do something like this, okay, and then continue buying to the upside, because I know that if a trend is bearish on the weekly time frame, it's going to complete that trend before changing its trend again. So you don't have to panic. All you have to do is just to wait, sit on your hands, and then be patient. Why there are more opportunity? So we are waiting for something, anticipating something like this on VTNS, and it's not going to take too long. Okay, it's not really going to take too long again. So price might do something like this, and then we'll start look for, once price do something like this, we'll start look for ourselves. We start looking for more buys on the 4 hour time frame. Okay, so until then, we will be sitting on our hands. The next pair on my list is V100. Okay, volatility 100 index. Going to the higher time frame, look out for where the price is coming from and where it's going to. So what do you have on V100? As you can see on V100, currently V100 is bearish on the weekly time frame, and on the 24-hour time frame is trying to go to each point of interest. It's looking for a point of interest that it can start reacting from. Okay, so clearly you can see that we have uh, a strip of liquidity here. We have our first break of structure after the sweep of liquidity, our first break of structure. And after price sweep the liquidity, it gives us this protected high. From there, we have price retrace 50% to give us our structural liquidity to be taken out, because that's the liquidity that will push this market down. And then from there, we have our second break of structure. And this entire place is our POI. So when price comes to this POI, we are expecting a push to the downside. Okay, we're expecting price to come here, push to the downside. But the funny thing is that when price come into this 24-hour time frame, you don't go to the 15 minutes time frame immediately to start looking for continuation. Why? Because you are going to incur more losses. The best approach to it is that you, once price go to this 24-hour time frame, you wait for price to give you a continuation like this on the 4-hour time frame or on the 1 hour time frame. All right. so that you'll be able to take more quality trade then. Okay, wait for price to give you a continuation on the 4 hour or on the 1 hour, right? When price gives you continuation like this, then you start looking for this same pattern on the 15 minutes time frame. And when price comes with your POI, you just execute and then hold the price to the target. Okay, take for example, on the higher time frame, this is the starting point. Okay, this point right here is the starting point. This is our starting point, correct? This POI is where price is starting to sell from, and below here, this is where price is expected to come to. This is the point price is expected to come to. So you start looking for continuation setup on this time frame till it take out this low. So if price give you a continuation on the 4 hour time frame after stepping into the 24-hour POI, this is going to be your starting point. This is going to be your finish point on the 24-hour. Sorry, this is going to be your finish point on the 4 hour. So once price take out this 4 hour low, you'll be done taking trade on that time frame until price gives you another continuation on the 4 hour or on the 1 hour. Then you can scale down to your 15 minutes or 5 minutes and keep taking more trade. So what we are anticipating right now is price to get into this 24-hour POI, give us a continuation on the 4 hour, then we scale down to our 15 minutes to look for continuation. Simple as that. So if you're having any confusion on this market structure, okay, I've already made a video on this channel explaining market structure in detail, step by step. You can visit some of my video and then you check it out, understand this, and then whenever I'm doing analysis, you'll be able to follow up and grab a lot of things on time. I promise you are going to understand every single thing in detail. So just watch the video and then you help yourself with it. All right. The next trade we are going to be looking at is V75 volatility 75 index. So starting from the higher time frame as always, okay, you're always going to be starting from the higher time frame. That is what we know how to do best. Okay, that is what give us direction. That is what we know that where price is coming from, where price is going to. So on the 24-hour time frame on step 5 on this 75 index, we don't know where the price is going to yet. So we are going to check. Don't know where the price is coming to. So let us check and be sure. So on the 24-hour time frame, we can't really see anything clearly. So we'll go to the 4 hour time frame to check if we'll see something better there. What do we have on? Okay, you can see we already have a 4 hour time frame say that previously, okay, it didn't take out the structural liquidity. So I think this one is not valid that much. Okay, clearly looking at this, you can see that we have a 4 hour setup here. Okay, we have a 4 hour setup. If you check the trend on the weekly time frame and the daily time frame, even though it doesn't give us our pattern on the 24-hour time frame and the weekly time frame, you see that the trend is very, very bearish. So knowing that the trend is already bearish, we just have to scale down to the 4 hour time frame. Then we'll look for our pattern. Once you see our pattern, we can start scaling down to the lower time frame to check for continuation. That is it. So we have our first sweep of liquidity here. If you can see clearly, we have our first sweep of liquidity here. We have our first break of structure here. We have price retrace 50% to give us our structural liquidity. Some of you be asking, how do I know that it's 50%? You use Fibonacci, okay, from your protected high here to this low, where price start retracing to give you 50%. If this retracement fall in between this 50% retracement on the Fibonacci, that means it's valid. Anything below it, if your structural liquidity is below this 0.5, which is the 50% retracement, it simply means it's not valid. So that's why I know when a retracement, a structural liquidity is valid or not. So we have our sweep of liquidity, our first break of structure. We have price retrace 50% to give us our structural liquidity, we mark it, and then from there we have price retrace back and break the structure to give us our second break of structure, making this higher time frame POI to be A plus setup. Remember, we don't take nothing less than A plus setup. Okay, and then this is our protected high. So price came into this POI, take out this structural liquidity, and then it starts selling to the opposite direction. And this is the finish point. Okay, this is the finish point. And this point right here is the starting point. You can see that price take it out as went to the opposite direction and it has already smashed its target. So let's check on the 15 minutes time frame. If V75 give us any continuation before smashing its target, because we cannot execute on just the 4 hour time frame because of the drawdown it's going to put us into. So if you check clearly, you'll see that V75 really didn't give us a continuation. Oh, I can see something here. Okay, I think it gave us a continuation because it is a sweep of liquidity here. Our first break of structure. We have our protected high right here. We have price retrace 50% to give us our structural liquidity. And then we have our second break of structure. Price gets into this POI, take out the structural liquidity, and then it sell the opposite direction. You can see. So price give us a continuation on the 15 minutes time frame. And that is only one continuation price give on the 15 minutes time frame. So currently, what we are going to be doing on V75 next is we'll be sitting on our hands and then wait for price to give us another continuation. Probably something like this. I'm looking at this point. I'm looking at this point. The price will do something better at this point. Ship of liquidity, break of structure. These are protected highs, and this is our POI. So we expect price to get into this POI, give us continuation on the 15 minutes time frame, keep taking it until it take out this point right here. Take out this point right here. Okay. So until then, we'll be sitting on our hands and then anticipate that move on V75 1S. Hope you all are following. So the next pair is V75 1S. V75 1S. From the weekly time frame, V75 1S is bearish. From the daily time frame, V75 1S give us a continuation. It gave us a continuation. So what do we do? If you can see clearly, it's already giving us this. It has given us the pattern already. We have our sweep of liquidity here. We have our first break of structure. We have our protected high right here, And then we have our price retrace 50% to give us the structural liquidity. And then this whole point is our point of interest. So as price got into this point of interest, it gave us the confirmation and then it started pushing to the downside. All right. So this point is our starting point. This point right here is our starting point, and this is the finish point. So price is definitely going to sell all the way from here down to this point. So what do we do next? We'll go to the 4 hour time frame to see if there's a continuation on the 4 hour. Then from the 4 hour or the 1 hour, we can scale down to the 15 minutes time frame. Looking at this, we can't see anything clearly on the 4 hour. So we'll go down to the 1 hour time frame to check if we'll see something better. And yes, we found something. Okay, we have our sweep of liquidity here. There's a sweep of liquidity around here. I hope you all can see clearly. There's a sweep of liquidity around here. Those is tiny, but it's still valid. Then we have our protected high around here. Price gave us our first break of structure after taking out that low, and then it retraced 50% again, giving us structural liquidity to be taken out later, and it returned back to give us our first break, our second break of structure, which is this. And the whole of this zone is our POI. So let's see if price got into the zone and then sell off. So seeing clearly, you can see that price got into this zone, sold off, and it's coming to this target. No matter how long it's going to take, it's going to get to this point. So let's go to the 15 minutes time frame if we see the continuation on the 15 minutes time frame. Looking at the 15 minutes time frame, I'm having something like this. I can see something like a sweep, a sweep right here, a break of structure, sorry. But first of all, this is our first sweep of liquidity. We have our sweep of liquidity here. So on the V75 on the 5 minute time frame, this is the continuation we have. We have our sweep of liquidity, our protected high, our first break of structure, uh, as price retrace 50% to give us our structural liquidity, and then break the sweep again to give us our second break of structure. So this entire zone is our POI. What we do now, we wait for price to get back into the zone and tap into this point of interest, give us our confirmation, and then set the downside. So that's basically what we are waiting for. We are looking out for currently on V75 one is. So the next pair on my list, I'm going to send this to the community. So if you're here to join the Telegram community, all you have to do, check the link in the description of this video or check the pinned comment on this uh, live session and then join the Telegram community, and also my link to the broker I trade, which is Deriv Synthetic Indices. You'll see the link there. Use the link, sign up, and also fund your account so that you can take the same trade I take in my community. The same trade I share with the community members, so you can also be part of it. So the next stage is step 300 index. So what do we do? Go to the 24-hour time frame. On the weekly time frame, step 300 is bearish. Then from there, we'll go to the 24-hour time frame and see if there's anything on the pair from the 24-hour time frame. If you see a continuation there, we'll scale down to the 4 hour. From the 4 hour, we scale down to the 1 hour and check if we see our continuation or we see our pattern from there. So on the 24-hour, you can see a sweep of liquidity right here. We have our first break of structure, and we also have our protected high here. We have our price retrace 50% to give us our structural liquidity. Now let's check using the Fibonacci if it's up to 50%. You don't just have to mark it like that. So if it's not up to 50%, we'll pass it. We'll look for another setup. Okay, it's up to 50%. So this is our structural liquidity, which is used for continuation. Okay, this zone now is our point of interest. You can see price has already tapped into the point of interest. So let's go to the 4 hour time frame. If you can see this on the 4 hour time frame, then we will not. Okay, this is the 24-hour time frame. What we do now, we wait for price to give us a continuation on the 4 hour time frame. The same pattern we see on the other time frame, what we'll be looking out for on the 4 hour time frame. We wait for something like this. We wait for the pattern like this to form. First break of structure, structural liquidity, take out, retrace 50%, come to this zone. Then from this zone, once price come to this zone, give us this continuation like this. From this zone, that is where we start looking for our continuation setup on the 5, 10, 15 minutes time frame, and we start taking trade. So we start going to start taking trade from this point until price take out this point, this H4 time frame or H1 time frame. Then we'll look out for another H1 or H4, which is the higher time, 4 hour time frame, 1 hour time frame. Then scale to the 15 minutes or 10 minutes to look for our continuation until price take out this target. Then we are done with. Then we'll be done with step 300 in there. So currently we don't have anything on step 300. So what do we do next? We go to the next pair, which is V50. What do we have on V50? Going to the higher time frame. On the weekly time frame, V50 is bearish. On the 4 hour time, on the 24-hour time frame, let's check if it is also bearish. If we don't notice that it's bearish on the 24-hour time frame, we'll go down to the 4 hour time frame. If you see that it's bearish on the 4 hour time frame, then we'll go to our 15 minutes time frame to look for continuation there. So V50 on the 24-hour time frame, there's a sweep of liquidity right here. There is this our protected high. Price gave us our first break of structure. Secondly, we have price retrace 50% to give us our structural liquidity that will be used for continuation because price needs to take out this liquidity and so that it will be able to push to the opposite direction. And the fourth, we have our second break of structure, which makes this higher time frame POI to be A plus. Okay, and then this zone is our point of interest. You can see that price got into this zone. Immediately price got into this zone, it start pushing to the opposite direction. Okay, so now what do? We go to the 4 hour time frame. If you are going to see a higher time frame continuation on the 4 hour time frame, so once you see a higher time frame continuation on the 4 hour time frame, we'll start taking trade on the 15 minutes time frame on the 4 hour time frame on the 4 hour time frame POI. Okay, see clearly we have a sweep of liquidity right here. Secondly, we have our protected high. We have our first break of structure. We have price retrace 50% to give us our structural liquidity. And then we have our second break of structure here. So the whole of this zone is our POI. The target is here. As you can see, price take out a structural liquidity and it sold to this target. Okay, so let's check on the forward on the 15 minutes time frame if there's a continuation that we would have taken if we have this pair on our watch list, if you have been monitoring this trade. So yes, there's a 15-minute continuation here that has already played out. I was supposed to take this trade, but something happened. I could not take it because of the confirmation. So these are sweep. This is first break of structure. That's sweep here. We have first break of structure. We have price retrace 50% to give us our structural liquidity, which is this. And then we have our second break of structure. And from there we have this our POI. So price got into the POI, gave confirmation. So the type of confirmation you look out for whenever price got into the POI, you switch to your lower time frame and then look out for confirmation, or you wait for me to tell you to sell or buy. Okay, and price did this, consolidate for hours, and then at the end of the day smashes its target. So this is like 1 to 4 raise to reward. Okay, so this is a continuation that we would have taken, okay, based on what we have on the 24-hour time, on the 4 hour time frame. That is the trade we would have taken. And also we have a setup here that just played out. I think we missed it. The sweep of liquidity, protected high. We have first break of structure. Price retrace 50% to give us our structural liquidity. And then we have our point of interest. So price come into this zone and started selling. So this is the target. So I think prices are almost at 1 to 1 RR. I think this is a 1 to 2 RR setup. So this is the setup we would have taken. But the only reason we will not take the trade is that it got our POI invalidated, but still yet is still played out. So the next pair on our list is, so currently there's nothing on V50. We'll be looking out for that. It's V100S. Next one on our list is V100S. So V100S is bullish on the weekly time frame, and we have to look out for continuation on the lower time frame. So if you go to the 4-hour time frame, there is nothing happening right now. We have a we only had a setup that played out on the 4-hour time frame on this here. So we just still need to sit on our hands and wait for more opportunity to come by. All right, so this is one of the setup that played out. I think it played out some days ago, if not some weeks ago. Okay, so we'll be looking for a continuation, a pattern on the 4-hour time frame continuation to form on this V100S. So I think we'll have this. This is up to 50%. The retracement, the structural liquidity is up to 50%. So what we anticipate on V100S right now is for you to do something like this, to break this place and then come back to this zone and give us a continuation on the 15 minutes time frame, so that we'll be able to take more trade on it. All right. So this is what we'll be anticipating on V100. Anticipating this on V100S. So until it does that, we'll be waiting, we'll be sitting on our hands. So let's anticipate for this until it come and do what you anticipate. So we just have to be patient at this time. Okay. The next pair on our list is V15. One is volatility 15x. Looking out for volatility 15x. So first of all, we'll go to the 24-hour time frame and see what is happening on the 24-hour time frame. On the 24-hour time frame, we can only see that the trend is bearish. Okay, we can only see that the trend is bearish. Nothing is happening on the 24-hour time frame. What do we do next? We go to the 4-hour time frame and check if there's anything happening on the 4-hour time frame. So the 4-hour time frame, clearly you can see that we have a sweep of liquidity right here. Our first break of structure, we have our protected high right here. This is price retrace 50% to give us our structural liquidity, which is this. And then we have our second break of structure. This simply means this is an A plus setup on the higher time frame, on the 4-hour time frame. So the whole of this zone is our POI. So what do we do next? Now we know that this is the starting point on the 4-hour and this is the finish point. This is the finish point, right? Now all we do is go to the 15 minutes time frame or the 10 minutes time frame and look for continuation. So let's check if we see a continuation setup on the 15 minutes time frame. Okay, clearly you can see that there is a continuation on this 15 minutes, which is this. I think the trade is already playing out. We have this. Sweep of liquidity. We have our protected high right here. We have our first break of structure, which is this. Then we have our structural liquidity, which we trade 50% to give us our structural liquidity. So let's use the Fibonacci to check if it's up to 50%. Of course it is. Then we have our second break of structure, which makes the setup an A++ setup. And this zone now becomes our point of interest. So as price got into this zone, it's going to start selling. And as you can see clearly, it started selling. Okay. And this is the finish point on the 15 minutes time frame. So price is going to sell up to this point. Okay. So price stop here is going to sell up to this point. All this is just like retracement. It's still going to maybe do something like this and then take out this target before any other move. All right. So currently there's nothing on the V151S. Right. So far so good. We haven't seen a single setup yet. So the next pair I'm going to be analyzing is V251S. V251S on the 24-hour time frame is bullish. If you see the trend is highly bullish. Okay, and there are a series of 4-hour time frame, 24-hour time frame setup that has played out. So most of those move I've seen for a 24-hour time frame scale down to the 4-hour time frame, and I've taken series of trade on it. And then currently you can see that it's just bullish. So we'll go to the 4-hour time frame. If there's anything we're anticipating on the 4-hour time frame, we'll mark it down, then we'll anticipate it. So when price comes into the zone, we'll now look for our continuation. So on this 4-hour time frame, clearly we can see our sweep of, we have our first sweep of liquidity, we have our protected low, we have price take out this high to give us our first break of structure, and then we have price retrace back 50% to give us our structural liquidity. From there we have price take out the high, the newly created high that it take out to give us our second break of structure, and then this zone now becomes our POI. Okay, so we're anticipating price to come into this zone, and give us our continuation on the 15 minutes time frame. The same type of pattern is given like this on the 4-hour time frame. We'll look out for it on the 15 minutes time frame, and once price into the POI, we'll execute on the trade and hold to our take profit level. Okay, so we'll be waiting on, we're sitting on our hands, and then we'll be waiting on this V25 to come into the zone. Then we'll do the necessary, which is execution upon confirmation. So the next pair I'm going to be checking out again is step 100 index. Step 100 index. So let's check on the 24-hour time frame. Nothing really is happening. Go to the 4-hour time frame and check if there's something happening on the 4-hour time frame. So on the 4-hour time frame, what should we be anticipating? Should be anticipating this move on the 4-hour time frame. There's a series of continuation here, but maybe price will react from the recent POI, which is expected to be this. Okay, let's check this out. It's our sweep of liquidity, is our protected high, is our first break of structure. All right, this is price retrace 50% to give us our structural liquidity, and then this is our second break of structure, and this zone becomes our POI. So we're anticipating price to get to this zone on the 4-hour time frame, give us a continuation like this on the 15 minutes time frame, and then we'll be able to take it. So until then we'll be waiting. So that is what we're anticipating on step 100 index. Okay, so I'll be updating you guys whenever it tap into the POI and it gives continuation. That's why you need to join the Telegram community where I'll share every trade with you. Because from the 6 to 7 that I will do this analysis, I don't post anything on YouTube again until the following day. So the only place you can stay update with me is in the Telegram community. That's where I share all my trade. Basically trade just synthetic indices, and that is where I share basically everything with everybody in the community. So if you don't want to miss out on that, you can just click the link in the description of this video or the link to the Telegram community on the bio on the comment section so that you'll be able to join and become part of us. The next pair on my list is step 200. So let's check it out real quick. Step 200 has been bearish on the weekly time frame. It just smashed its target some days ago. Okay, so what do we do next is to anticipate a 24-hour time frame setup, which is this. Clearly you can see this. We have a sweep of liquidity here. We have our protected high here. We have our first break of structure. Price retraced 50% to give us our structural liquidity. And then we have our second break of structure. From there, we have our POI. So what is expected of this step 200 is price should just go back into this zone, give us a continuation on the 4 hour or on the 1 hour, and then we'll look out for our continuation on the 15 minutes. Or we'll wait for price to come to this 4 hour zone. There's a 4 hour zone here that we can also wait for price to come to. Which is this. You can see a sweep of liquidity here. Protected high here. Price is just 50% to give us structural liquidity. And then we have our second break of structure. This zone becomes our POI. So price is expected to come to this zone. Once price comes to this zone, we'll start looking for continuation on the 15 minutes time frame. Then we'll take it until you take out this target. So if you have been following, you can see that this whole thing is basically simple. And if you pay close attention, it's something you can be doing by yourself. Okay. So the next on my list is step 400. Step 400. So what do we have on step 400? Let's check from the higher time frame, which is from the daily time frame to the 24-hour time frame. On the 24-hour time frame, we can't see anything clearly on step 400. So what do we do? Go to the 4-hour time frame and check if there is anything visible there. Let's check, and if we think we see anything there. Okay. On the 24-hour time frame, we're anticipating price to tap into this POI, which is this. First of all, we have our sweep of liquidity. We have our protected high right here. We have our first break of structure, which is this. We have price retrace 50% to give us our structural liquidity, which is this. And then we have our second break of structure, which is this. And this zone is our POI. So what we're anticipating now is price to tap into this zone, give us continuation on the 15 minutes time frame so that we can be able to hop on the trade. So this is what we are looking at for on step 400. Whenever price tap into this zone, look out for this and then we execute on it. Quite simple, right? Yes. So this is what you're anticipating on step 400. Once price get into this zone, once price get into this zone, we know that okay, it has already given us a starting point and the finish point is going to be here. So what we look out for on the lower time frame is start looking for continuation on the 15 minutes, 10 minutes, 5 minutes time frame. So when price give us this continuation, that is where we can start executing on the trade. The reason is because the higher time frame give you a bigger picture of where the price is going to. You don't just execute on the higher time frame because you don't know if price is going to start selling up, start pushing down from there. So the fact that you know that okay, price has already started pushing down from the higher time frame, the lower time frame will now help you to give you more entries, okay? Because executing on the higher time frame might put you in deep drawdown, and at the end of the day, price might not hold. So you just need to allow price to start moving from the higher time frame first. Then the lower time frame will give you a clean entry. So currently there's nothing on step 400. Most of the pairs we analyze now, we are just anticipating move on the 24-hour and the 4-hour time frame. So the next on my list is V51S. V51S has been bullish. As a matter of fact, it has been bullish on the 24 on the weekly time frame, and it's yet to smash its target. I think it has already smashed the target. So what we anticipate next is go to the 24-hour time frame. Currently, there's nothing on the 24-hour time frame. We can't spot any pattern. So let's go to the 4-hour time frame and check if we can spot any pattern on the 4-hour time frame. Okay, I can see something here, which is this. That was sip of liquidity. You have a protected low. So let's check if this retracement is up to 50% using the Fibonacci tool. Yes, it is up to 50%. So these are structural liquidity now. This becomes our structural liquidity. And then this becomes our second break of structure. It simply means it is now an A plus continuation. Okay, this is our first break of structure. And this point, the whole of this one becomes our POI. The whole of this one becomes our POI. So what are we expecting next? We're expecting price to tap into this 4-hour zone. Once price tap into this 4-hour zone, we can then start looking for continuation on the 15 minutes time frame until price take out this target, which is this. Once price take out this target, we are done with it. So currently that's what we're anticipating on V51S. So let's check the next pair, V25. Let's check V25 index. Oh yes. So on the weekly time frame of V25, V25 is bearish on the weekly time frame. Very, very bearish. So the only reason you know that why am I sure that V25 is bearish is go to your MT5 on your phone and then switch to the weekly time frame because I can't do that on this trading view. So on the 24-hour time frame, there's nothing. So we'll go to the 4-hour time frame and check if price has tapped into any zone. So clearly you can see that we have our sweep of liquidity on the 4-hour time frame here on V25. We have our sweep of liquidity right here. We have our first break of structure. This is our point of our protected high. Secondly, we have price retrace to give us our structural liquidity, and we have our second break of structure here. Okay, so this entire zone becomes our POI. So price has already tapped into the 4-hour POI zone. So now the next thing for us is scale down to the 15 minutes time frame once you see that price start rejecting, and then we look for continuation. So clearly you can see this is the starting point, and price needs to turn back to come back to this finish point. Why? Because trend is bearish on the weekly, and on the 4-hour price just tap into the sell 4-hour POI. So that's what you are going to be anticipating. Okay. And whenever any setup shows up, I'll drop it in I'll drop it in the Telegram community. That is why you need to be active on the community. So the next pair on my list is V91S. What do we have on V91S? Okay, V91S, we're going to start our analysis from the daily time frame, because on the weekly time frame is bearish. On the daily time frame, yesterday I showed you that V91S is bearish on the daily time frame. We have this. Where is selling from? We have this sweep on the daily time frame. It's our protected high. We have our first break of structure, which is this. And we have price retrace 50% to give us our structural liquidity. Then it breaks the low again to give us our second break of structure. So we have this zone as our point of interest. So let's see if price tap into that zone and started selling. Okay, price tap into the zone, started selling. Okay, this is on the 24-hour time frame. Remember, once you see pairs on the 24-hour time frame selling, you don't go to the 15 minutes time frame. You check the 4-hour time frame is if there's any continuation there. So let's go to the 4-hour time frame if we see anything tangible on the 4-hour time frame. So on the 4-hour time frame, you can see that we have a sweep of liquidity on the 4-hour time frame, which is this. We have our protected high, which is this. We have our first break of structure, which is this. We have price retrace 50% to give us our structural liquidity, which is this. And we have our second break of structure. So this is A plus setup. This is an A plus setup on the 4-hour time frame. So the whole of this zone now, this is our point of interest. So price is going to start selling from here, and the finish point is going to be at this point. Okay, so this is the starting point, and this point is the finish point. So let's go to the 15 minutes time frame if you are going to spot any 15-minute continuation, so that we'll be able to take trade on that continuation. So if you go to the 15 minutes time frame, there is nothing happening on the 15 minutes time frame at the moment. So if you are going to be anticipating any continuation, it's going to be something like this. So we'll have this. Then wait for price to come into this zone and then sell. But it hasn't done that yet. So this is what you're anticipating. If you give us what you are looking for, we'll take it. If it doesn't, we'll keep waiting until you give us what you are looking for. So the next pair I'm going to be analyzing is step volatility 31S, which is the last today. I think as time goes on, I'll be including pairs like maybe jump indices and other pairs. But for now, we are analyzing all the volatility indices and the jump and the step indices. So on the V31S, what do we have on V31S? Looking at the 24-hour time frame, we have a sell on the 24-hour time frame, which is this. You can see clearly We have our sweep here, which is this sweep of liquidity. We have our protected high, which is this, right? We have price retrace 50% to give us our structural liquidity, which is this. Okay, this is our first break of structure, and this is our second break of structure. Remember, this is 24-hour time frame, and this zone becomes our POI. Price tap into this zone and is expected to start pushing down. This simply means this point, this is the starting point, and this point coming down here is going to be the finish point. Okay, so basically price needs to come and take out this low. So once you see this on the 24-hour time frame, what do? You go to the 4-hour time frame if you spot the same thing. So let's go to the 4-hour time frame and check if you are going to spot the same thing. So on the 4-hour time frame, do we see anything on the 4-hour time frame? On the 4-hour time frame, we can see that we have a sweep of liquidity which can be used. We have protected high here, and then we have price retrace 50% to give us our structural liquidity. And before that, we have our first break of structure, which is this. Price retrace 50% to give us our structural liquidity, which is this. And price break the low again, giving us our second break of structure. And once it gives us our second break of structure, what does this setup become of? It is now called an A plus continuation. Remember, we only deal with A plus on this side. And the whole of this zone now becomes our point of interest. So this is the 4-hour time frame. Price is expected to start selling from this point, and then the end point is this is the target. Price will start selling from here, and then the target is here. So what do we do next? We go to the 15 minutes time frame and check if we see our continuation on the 15 minutes time frame. On the 15 minutes time frame, clear that we can spot a continuation on the 15 minutes, which is this. We have our sweep of liquidity right here. We have our first break of structure, which is this, right? And then we have our protected high, which is this point. This trader shared it with the community yesterday, but the thing is, price hasn't come to our POI yet, so that we can execute on it yet. So we've been anticipating this trade since yesterday. So today we hope it comes to our POI, do the necessary things so that we can take the trade. So I'm going to still be updating you guys on the channel. Whenever price comes to the POI, so that we'll be able to execute on this trade. Right. So this zone now becomes our point of interest. So once price comes into this point of interest, we start selling. I'm personally going to call the trade in this channel. Whenever price comes into come into our point of interest and do exactly what we wanted, we'll take it. All right. And whenever I call any trade, don't forget to apply risk management. It's, it's a game of probability, right? So this is what you're anticipating. This trade is already in the coming. I posted it yesterday, so it's still going to come to. I'm still going to post it again. So if you are not in the community yet, you have to join the community, and then you follow up with the trade. And also, don't forget to sign up with the broker, which is Deriv. The link is in the comment section or in the description of this video. Sign up, fund your account, and then we'll take trade together. Take trade almost every day, depending on the market condition. If market is presenting opportunity, we'll take trade every day. But if it doesn't, we'll sit on our hands and we'll wait for our best setup to form so that we can always be taking trade together in the community. All right. So if you watch to this point of today analysis, okay, don't forget to like, subscribe, and share this stream to your friends and those of you that want to learn more about trading. Okay, so the place that most of the things that are happening is in the community. On daily live stream, we stream on every day 6 to 7. Sometimes it's going to be from 6 to 8, depending on how the market condition is. And this is what to do every day, 6 a.m. to 7 a.m. Don't forget to share the link. Okay, share with your friends, your family, those that are interested in learning trading, and help them. Let's lock in 2026. And I'm going to be seeing you guys same time tomorrow. Make sure you're active and make sure you're active in the Telegram community. Make sure you're taking on the trade. Make sure you're applying risk management, and make sure you don't miss out on anything. If you have any question, you can always message me in the Telegram community. You can message me on Telegram. You can easily reach me on Telegram, and I'll do it to answer each and every one of your questions. All right. I'll see you guys tomorrow.